Can you claim Social Security while also claiming a government pension? What about this WEP and GPO? Well, you've heard of this. If you're a government employee or from a municipality and you have a pension, you might want to pay attention here. We're going to be talking about government pension offset and windfall elimination provision. Let me bring my co-host, Tony Shore. Tony, welcome to the show. I wanted to bring you in here to talk about these very exciting topics. Have you heard of these before? GPO and WEP?
Well, a GPO stands for Great Pizza Organization. That would be a really good pizza joint. It's just an acronym that they use. So other than that, no government pension offset. No, I actually have not heard of that.
I tried to not give you advanced warning of what we're talking about, and you came up with that one pretty quick. But then again, anytime the P is there, the pizza's getting it filled in.
Yeah.
So this is government pension offset and windfall elimination provision are two different provisions. So I want to be very clear as to who this impacts so that if you're watching and you have a government pension, you don't panic, okay? These are Social Security provisions. So they reduce your Social Security benefit for yourself and for your family, if you got family using your Social Security, which some people do. If you have a pension from an employer that is not covered by Social Security. So you might say, well, who are these people? This would be a teacher, a police officer, a firefighter, a government, municipal, county clerk or something that has a pension through their job. But the key is, if out of your paycheck, you are putting into the pension and also into Social Security, this doesn't apply to you. This only applies to people that have that government pension that is not contributing to Social Security at the same time. So there are people out there.
Okay.
There are people out there that this impacts. And in fact, the windfall elimination provision and government is about 3% of the population, and the government pension offset is about 1%. So combined, they're about 4% of people that are actually impacted by this. So there's a lot of us out there. Now, I say us, I'm not impacted by it because I don't have a government pension. My wife doesn't either, but my father has a government pension from the state of New York.
Yeah, we all know people that do, right? And I mean, 3 million people, that's nothing to sneeze at.
Right. So the hope of this podcast is to get people that are in this area to start becoming aware, because what I'm finding is there's just not a lot of education on this. When you get your Social Security statement, it doesn't factor in GPO or WEP because they don't know what you're doing outside of the Social Security earnings. They're not aware if you have a government pension that you're not adding Social Security to. So they just assume you don't. Now, you could go to Social Security Administration and use the calculators on there, which is what I recommend you do, because these formulas are really complex. And I'm not going to get into the formulas, but what I want to point out is you can get that Social Security statement and not see this. And then when you go to retire and claim your Social Security benefit, and all of a sudden you're getting a whole bunch less or nothing at all, you're going to say, well, why wasn't I given a heads up? Well, you're getting a heads up now because you're listening to Dolphin Financial Radio.
Awesome. There you go. Wow. What a plug.
So windfall elimination provision is for somebody that has a pension that they haven't put Social Security into. Let's say I'm a teacher in California, I think, Michigan too, I think. There's other states, right? Let's say I'm a Michigan teacher and I have been putting into my pension and I get the pension. I'm all excited about it. And I also worked part-time elsewhere at a job where I did put into Social Security. Right. So I'm expecting, and I get my statement. I'm excited. I'm supposed to get $1,000 a month from Social Security in addition to my government pension. And then I don't get $1,000 from Social Security. So what happens is they reduce the Social Security benefit that you were going to get from your other job because you had that pension. And there's a formula for it. But bottom line is there's a limit to half of the pension amount is what they will reduce your Social Security by. So, Tony, if you had your radio co-hosting salary, which you put in Social Security, right?
Yep.
Then you also worked for the government, and you're supposed to get $1,000 from your Social Security benefit. You calculated it. You're excited, but your pension from your radio show work or from your government job is $1,500. They will reduce your Social Security by up to half. So $750 of your $1,500 pension would come off your Social Security. So if your Social Security is not very high, you might not get anything. So this is the problem.
Wow, that seems I don't like that. If I'm working a regular job and I'm paying Social Security tax and I am owed X amount, I've put in the highest 35 working years, and I put in that, but I also have a government pension. I should get both because I've paid into Social Security, but they don't let you. They only give you 50%.
Well, so they reduce your Social Security based on your government pension. But you said something there. You worked for 35 years putting into Social Security. If you have substantial earnings, there's a number that's pegged to some sort of inflation.
Okay.
If you have 30 years of substantial earnings, then you don't get impacted by windfall elimination provision. But if you don't, if you only worked for 15 years and put into Social Security, yeah, you get hit with this.
Wow.
Now, that's
still not fair, even if I only work.
And you say it's not fair, but I'm here to break your bleeding heart and tell you why it is fair. But again, this is subjective, right? So it's designed to prevent those who appear to be low earners but are actually earning outside the Social Security system. Because you got to remember something. Social Security favors the lower income earners. So the lowest tier earner in Social Security gets about half of their earnings back in the form of Social Security, right? So if you're making, $1,500 or $1,000 a month in Social Security, you probably earned about $2,000 a month while you're working. As you make more and put more into Social Security, you're actually getting a lower percentage. So you're getting, down to like a quarter of what you put in.
That makes sense, yeah.
Right? And so it's a progressive tax system or a progressive benefit favoring the lower income earners.
Progressive benefit system, yeah.
Right. Progressive benefit on top of a progressive tax system that we have. So you are favoring the lower income earners. And what the windfall elimination provision is designed to do, which they, 1970s and early 80s, they made these rules, was to prevent people that let's say you had a government job and you have your government pension, and then you did a side hustle for 15 years where you were making not a lot. According to the Social Security's results and looking at your statement, you have a bunch of zeros in there. And the zeros are suggesting that you didn't make any money. But in reality, you did make money. You just didn't get taxed on it for Social Security purposes.
Right.
You were working as a teacher for 30 years. You have 30 zeros, right?
I see their logic now.
You come along with 10 years of, I made $24,000, and they're saying, wow, this person only worked for 10 years. We're going to give them huge benefit of Social Security because they're a low income earner. The Social Security office doesn't realize that you have a government pension originally. So then they made the windfall elimination provision prevent people from doing that. They don't want you, the government employee with the pension who didn't put into Social Security, to get the same benefit as someone that has put into Social Security for 35 years at a low level.
Okay.
Right.
I see the justification there. I still don't like it, but
well, the easy solution is to work. If you're working with a government pension, also have substantial earnings up to 30 years so that you can get both.
Yeah.
But, but a lot of times it's like I'm a teacher. I work during the summer.
That would be hard.
You have to be aware of this. because if you don't, you're going to get a big surprise, right? Now, this is where it gets even worse. Not necessarily worse. This is a little different. Let's go to government pension offset. This reduces your survivor benefit if the survivor is got a non-covered pension. So now, let's say you work for the government and you never put into Social Security and you have a government pension, right? So, and you didn't have any other Social Security earnings, but your spouse did, and your spouse is getting $2,000 a month in Social Security, and they die, and you're like, okay, well, you're not happy they're dead, you're not okay. You're like, okay, now I get my survivor benefit. I get their full Social Security benefit, which is what happens to most people. You get your own or your spouse's, whichever's higher, right? You get the higher of the two upon death. If yours is zero because you didn't put into it because you worked for the government, you would get the full spouse benefit, right? Wrong. You get government pension offset. So your survivor benefit is reduced by 2/3 of your government pension. So you might be saying, well, my wife put into all the Social Security all those years.
Yeah.
And that's for both of us. She dies early. I get nothing because I get a government pension. Yes. Again, it's trying to match the idea of a traditional couple without a government pension. Husband and wife both put into Social Security. One dies, you lose one. So in this case, husband, only one person puts in. Why is it fair that they get their government pension and the Social Security when they, whereas if I didn't work for the government, I would lose one. So that's why they're doing it. They originally had it where you don't get any. If you have a government pension, you don't get any survivor benefit.
Right.
Then they change it to 2/3 reduction.
Yeah, because I used to be, if somebody worked for the government, it was their entire career typically. So they just had it. So they had you didn't get Social Security because you got a government pension, and because you never paid into Social Security probably, or very little. So I get that. But things have changed where people like my brother-in-law was in the Air Force for a while in the military. So he was in long enough to get a military pension. And then he went to the private sector for a number of years. Then he went back to work for the government, for the State Department in DC. So then he's then he gets that pension. And so he's got a couple of government pensions coming in, but he did contribute for a number of years, probably 15 years, to Social Security. So he is exactly why because people aren't just working one job for the government their whole lives. A lot of people, some people are still, but not everybody does that. Yeah.
And so they're trying to make it equitable to prevent people from getting more than they should by having a government pension. The easy solution is just eliminate or force government pensions to also contribute to Social Security.
Right.
But it's known fact that those that don't contribute to Social Security have a much higher pension than those that do.
Yes.
Because they reduce the government pension because they know you're going to get a bump up from Social Security because they're contributing to it. There's only so much money to go. So but the thing that I wanted to point out is you just need to be aware of this, because it's a big, big surprise if you're expecting something and you don't get it. And then they thieved, they stole from me, on a side note, if you do have a government pension and Social Security, and you know you're going to be hit with this, you can delay your pension, take it later to turn on Social Security. You don't have a windfall elimination provision if you haven't turned on your government pension. So you could take Social Security, get the full amount or whatever it is that you get, then turn on the pension, and then you'll get the reduction at that point. But there is hope for those that hate this, like you, Tony. There's the Social Security Fairness Act that was put in House Bill 82. I put the link down here for people watching on YouTube. I think January 2023 that was put in there, and it's designed to repeal WEP and GPO.
Interesting.
Yeah. You might want to see the act also repealed WEP, GPO, and the GOP. Knowing you want that repeat that
No.
the party repeat.
But
But yeah, again, how many years has this been being tried to get repealed and
Yeah.
unsuccessfly? So
and you
is it going to
explained, I
happen?
think now that I know the thinking behind it, and look at the big picture that you've helped explain, I don't have as many problems with it. Plus, obviously, I'm not affected, and my immediate family isn't affected. But I have in-laws and
Right.
friends that would be affected.
So you say, well, my spouse works for the government, so he's I work for the government, so I'm not going to be able to get half of my spouses, or I'm not going to get my spouses when they pass. Whereas if I work for a big company and I get Social Security, and my spouse is a stay-at-home parent and they make a little bit, they're going to get the full amount. Why is it fair that I get both?
But like you said, even with WEP and GPO, those people typically end up with more than people who are just going to collect Social Security from the private sector. I mean, government pensions are still a huge advantage. So I guess I don't have that much problem with it. So
Right. And this goes back to like which one's better. We did a show, pension versus 401k. Watch that. There are benefits to government jobs that don't relate to the private sector and vice versa. So this is just one of those things. I think that I don't think this is going to change just because it is designed to level the playing field to continue to favor the low income earner. So it's a very small case of people that are getting reduced benefits, and you know how that happens. If it's a small group, they get ignored by government. So but if you're out there listening and watching, just know if you worked for a government entity, first know whether or not you also put into Social Security. That's step number one. If you didn't, then you're going to have to understand WEP and GPO. And don't think you could call up Social Security and just get answers, because you just never know who you're going to get. It is a very confusing system. So you're going to want to, there's books out there on this, there's video, just learn about it. But the goal of this podcast was to make sure you're aware, because I don't like surprises. If you're a public sector employee, make sure you understand whether or not you're subjected to GPO or WEP. And if you are, start planning now, so there's no surprises.
Sounds great. Good show.
Yeah. Thanks, Tony. If you guys have any questions about this, feel free to reach out to our office. Put it up here in a moment. Everyone else, if you haven't yet, subscribe so you get the new updates, because every time Tony starts opening his mouth, people want to hear it. You'll get a notification if you click subscribe. So love to see you, and we'll actually see all of you, including Tony, next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Wendol nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.